All right, folks, good afternoon. Let's go ahead and get airborne with our primary live trade beat. We have a lot to cover today. Going to definitely talk about energy. Steve Wynn isn't in this portfolio. We'll be talking about Wynn tomorrow and what's going on with Wynn. If it's not in the individual portfolio, we don't like crossing those portfolios, man. So we're going to talk about Wynn for a while tomorrow and actually getting bullish on Wynn with this pullback here. Remember, an iron condor is great until it's not, and that's exactly what's going on there. All right, let's get a strategic brief knocked out. We briefed that one already, but this is a little thaw, in my opinion, in kind of the trade or tariff war. So China came out today and said, hey, you know what? We'd like to buy about 70 billion of some products and trade. So the Beijing says purchases hinges on whether Trump imposes threatened tariffs. So this is an interesting response. Where's our? Damn it! Hold on one second. Oops. Oh, stock charts. So this is an interesting response to the potential trade war. Chuck just took Amazon profits. Yeah, $1,200 in 24 hours. You bet, Chuck. So this is an interesting response by China to Trump's. Here's last week, folks. Remember in our brief, we're like, holy crap, June. What's the date? 15th, whatever it is. There's a lot going on in June, folks. We have the OPEC meeting. We got Trump potentially broadside in China with $50 billion. There's a lot going on. So here's the market pullback on the renewed trade war fears. And what did I say? Two countries didn't respond. Well, this isn't a country, you know what I mean. The EU and China. So China, this response by China is very, very, very interesting. Tamara, I couldn't agree more. It is the type of response that I think Donald Trump is looking for. So I don't think this is super good, but this is at least a move in the direction of good. But look at this. There's a $375 billion trade deficit with China. So this is China saying, hey, this could go a long way to meeting that target. So obviously the president's, it's a step, right? How do you eat an elephant one bite at a time? So it's interesting. I think it shows that the adults are talking, and somehow we're going to meet in the middle. Okay. The decision, which came less than 2 weeks after both sides declared a truce in the simmering trade dispute, Mr. Ross, he's heading to, he just got from Beijing. So it's interesting. So the market has had a muted reaction. I would have thought the reaction would have been a little bit better than this, but this has been we've had a pretty good couple days of a rally. So exactly, Tamara, if the president's looking for $200 billion and they ponied up 80, it means he can get them at least halfway, right? Maybe up to 100, 125 or something like that. So this is good news. So I'm bullish on something getting done with China and trade. So relatively good news on that. And more to come. Anything else on that? Hold on. You know what? I didn't look at the FXI today. Yeah, I mean, it's kind of flat. Not really doing too much there. We'll take a look at Brazil in a couple of minutes as well with what's going on with the real versus the dollar. We've been talking, this is a sleeper story. We're going to talk about energy today. Everybody should have gotten the text alert on the XLE. Thomas, yep, you've been here for a little while, man. You're in GoToWebinar. GoToWebinar, you can't see everybody's chat. Tomorrow in GoToTraining, and Thursday we're in GoToTraining as well. So you can see everybody's chat in those two sections. So the Iran thing and OPEC and everything's getting really, really interesting with oil. So OPEC faces a new concern over global oil stocks, China. Nobody knows the reserves in China. They This is a very secretive number. So, and we talked earlier in the week about how in a couple weeks here, we have what? We have the OPEC meeting, and it looks like Russia's probably going to tell people to pack sand. Not only is that going on, but the president has quietly asked, where is it? The president has quietly asked Saudi Arabia for how many billion? Where is it? This was breaking news. Oh my God, did everybody see that Kate Spade died? Isn't that crazy? She killed herself, 55 years old, with a scarf. Yeah, exactly, Tamara. 1 billion. It's a billion barrels more, isn't it? So, yeah, exactly. She's nuts over that. Yeah, it's a billion. Yep. You guys probably saw the story like I did. So the president is quietly asking Saudi Arabia to hook us up. So, Kevin, if we have time, we'll do that. Okay. Like I said, we don't like mixing portfolios here, man. So we're going to talk about oil. We're going to get bullish on oil here. We have a June 22nd Fed OPEC meeting. Kuwait and Iran are leading a faction in the cartel that are upset about an agreement struck between Saudi and Russia. So, it really is a den of thieves, folks. Kuwait, Iran, Qatar, or Qatar, the UAE. It really is a clown car with OPEC. So I'd be getting bullish. Did everybody get the trade alert? I don't want to get super tactical right now, but the trade's already moved 2 cents. A good credit. So let me just cover this trade real quick so we can get bullish on it. Okay, a couple of people are filled. I'd look to sell 165 of the June 22nd. Why June 22nd? Because that's the OPEC meeting. I think, let me throw the chart up in the background here. The XLE, there you go. So here's the nice rally in crude. We got long some XLE calls. We got out of them, got in some new ones. It rolled over. I said, let's get out of them. We haven't been XLE in a couple weeks, so I liked a nice bull put spread right around this 70, right around the middle of this Keltner channel. I think we're going to rally. If you don't know what's in the XLE, let's take a look here because it is an ETF, right? The XLE is the Select Spider Energy, and it's a pretty good proxy for what? ExxonMobil. Where the hell's the damn holdings? Here it is. ExxonMobil, Chevron, Schlumberger, ConocoPhillips, EOG, Occidental, Valero, Phillips, Halliburton, and Marathon. So this is the XLE is a pretty damn good proxy for this energy sector. And look at the weighting that ExxonMobil has, about 23%. Chevron is so here's my gold medalist, ExxonMobil, and then the silver medalist would be Chevron. We don't have a bronze medalist in this group. If it would be, I like the oil services after like two big oil companies. Remember, oil services, folks, when you see a picture like this, somebody makes that thing, that thing, that thing. Somebody makes this big rig, the pipes, so like in oil, these dudes, this boat that they go out to the rig on. Oil services, we used to trade this years ago when oil was like on a huge tear. The OIH actually kind of looks like the damn XLE. Hold on a second. Let's take a look at the correlation. Well, that's pretty damn correlated, to be honest with you, so never mind. But they always don't move in lockstep. Let's take a look at what exactly OIH, OIH holdings. I forget what's in this. I haven't traded the OIH in a while. Okay. Holdings. Right here. Schlumberger, Halliburton, Transocean, Baker Hughes, NOV. Yeah. Okay. Well, it's not too diversified than the XLE. Never mind. Let's see. Yeah. So whatever, folks. I don't want to get drawn off on the OIH, but that is another proxy. The XLE is more weighted towards energy companies, ExxonMobil, Chevron. The XLE has more of the Schlumbergers and the Chesapeakes and stuff like that. But so here's the trade, and it's already I put it out at 20. Hopefully you guys got filled. If you got filled at 20, you're already up what, $420? Nice. Mid market's at 18 cents right now. So I said 20 cents plus or minus 2 cents. Everybody should have gotten the text alert. If you didn't, and you're on our SMS problem child list, you got an email, because I got both of them. I'd look to sell 165. Why 165? I'm going to tell you in 2 minutes. Of the June 22nd, I already told you we have an OPEC meeting around there. And before the meeting, I'm pretty damn sure Russia and all these clown cars are probably going to do some posturing and make some announcements, which is going to be bullish for this, in my opinion. What if you're wrong, man? Russia says, hey, we're going to stay in. We can all get along. Let's just open the spigots and pump oil until it's, let's party like it's 1999. And the XLE falls out of bed. Because this can look like a dead cat bounce here, folks. We're actually seeing a dead cat bounce in the EWZ, which we're going to cover in a couple minutes. Arthur, I just answered this with Thomas. Folks, listen to me. You're in Go. I don't know why this is new. A lot of you guys have been around here for a while. We are in GoToWebinar. On Mondays and Tuesdays, we have way more than 200 people. And you have to be in GoToWebinar. So you can't see each other's chat because there's just way too many people. On Wednesdays and Thursdays, we are in GoToTraining. And we might have to move out of those soon because we're getting close to the room limit of 200 people. So on Thursdays and Wednesdays, you can see each other's chat. Guys, that's just the way it works. Patrick, the XLE volume is TGO crazy. No hope. Okay, so that looks like a classic dead pounce to me, and it could be. However, it can do that on all the reasons that I'm citing, that I'm bullish. Okay, sent the alert out at 20 cents plus or minus 2 cents. So the lowest fill I'd look for is about 18 cents, and the highest fill I'd look for is 22 cents. Why do I do that? Okay, so there's 18 cents, there's 22 cents. Here's why. If it's at 18 cents, that means the XLE is turned around and is heading higher. And the risk to reward might be too small. We might be risking $6,000 to make like $2,000. That's just not, I don't like that risk to reward. What if it's, well, whiz, shit, I can get 22 cents for this thing. Well, that means, let me get rid of some of these. That means XLE is actually going lower. So it might not be a good thing that you got filled at 22, like, haha, I got 2 cents better than you. Well, that's because XLE is going down, dude. So if it starts going north of 22, I kind of stop and say, well, is this thing going to stop? Should I just sit on my hands? Should I not put the trade on? Or maybe I roll these strikes down a little bit to add some altitude underneath it. So that's why I put out a range. 18 cents, it was 20 cents mid-market when I sent out the alert, plus or minus 2 cents. I am bullish, or at least neutral, on the XLE. I'm using puts, and it's a spread. This is a bull put spread. Okay. It is also, for the new folks, called a credit spread. We are getting paid to do this. You're bringing in a credit. You are the house, man. Hopefully we'll get to win at the end here. But your Win Resorts, very bullish article on Win and Seeking Alpha and a couple things today, which I'll at least give you if we don't have time to talk about it. We should, though. So you want to be the house, right, in this bull put spread. There's absolutely no reason I'd put a top on here and a bear call spread and look to leg into an iron condor, because I think this thing might just go off to the races. Okay, now let's take a look at our metrics. And as TGO members, I've trained you, or you are getting trained, to only look in one place whenever I click this analyze button, right? Analysis. And that is the max potential loss. $5,000, if you'll allow me, $49.50, right? Based on a $100,000 model portfolio, Wiz's SOP is, hey man, I don't want to risk 5% of this thing. Why? Because I want to live to fight another day. You risk 25% or 50%. Holy shit, man, you get wiped out with one trade. Don't do that. Right? What's this 49.50 based on? Right here. 165 contracts. That's an odd number. It is, because I try to get right around 5 grand. There is a method to my madness. I want to be right around 5 grand. Now that I know my risk, this is known. If we wake up tomorrow and OPEC says, you know what, we all love each other, oil's free, and this thing goes to zero, that's the most you can lose. And to be honest with you, using at-the-money volatility, there's a pretty high probability of getting kicked in the teeth on this one, folks. That's a 33% probability of a max loss. Okay, that's literally the options market saying, "Hey, man, OPEC could wake up and say, you know what, we just want to all make money. Let's open the spigots and just pump oil like there's no tomorrow." Well, that would suck, right? They've done that before. Remember, we've been bearish on this. We've had bearish trades on this when OPEC did kind of do that whole, let's screw each other and just pump. Remember that? We were doing bearish double verticals on this thing. We were pounding oil into the dirt. This was years ago. I remember doing a webinar I was doing some consulting in Miami. I remember what did WTI bottom out at and Brent? 28 bucks? Man, you couldn't, hold on, let me pull up a chart, at least of the XLE. I remember this, folks. So, it's got to be 5 years. Yeah, what did this bottom out at? 49. No, it's longer than that. Why can't you get charts beyond here? Oh, there we go. Maybe was it. That's right. The XLE did say it got airborne around here, but look at the bottom there. 40. I thought it was lower than that. Maybe it was the OIH. Whatever. My point being, folks, is let's go to the risk page here. So that is the max potential loss. So the options market is saying, hey, man, this could implode. There's a 33% probability that this thing implodes. Okay? Now that you say, I know the risk, Wiz, I'm the pilot in command of this aircraft. I signed for this airplane. I literally signed my name, put the date and my rank. I own my portfolio. Now you can look up here at Mr. or Mrs. Happy and say, did everybody see this today? The Miss America pageant isn't going to have the swimsuit competition anymore. Is it going to be like the Boy Scouts? Now, can dudes be in the Miss America pageant now? What the hell is happening to this country? We're not going to be judged on appearance. Okay, great. Somebody else is going to come out with the Miss America pageant and keep it the way it is. Donald Trump he was Miss USA. Damn, that's the only reason I watched it. It's stupid, folks. It's just whatever. Sandwich board with ACT score. There you go. Now we can look up here and say our max potential profit is $3,300. Again, you don't want to risk any of that stuff. You change this. Maybe you're 50 contracts. I don't know. What would 50 contracts be? $1,500. This is a really, really good risk to reward ratio. So let me take a look at the at-the-money straddle in a second here, because I want to see what the options market is pricing in. Okay, so 74.80, just at the bottom of this Keltner channel, right here, 74. Well, there's 74.80 right there. So this ain't a trade for the faint of heart, by the way. So yeah, everybody gets a trophy. And remember, the Greek, we make money 3 ways on this trade. XLE goes up. XLE stays where it is. It just kind of hovers around. It can even go down, folks. It can go down and touch just north of that Keltner channel as long as it stays above 74.80. Bull put spread. Love it. Yes, whoever just asked that about Amazon. Hold on, let me just finish this up. Theta. Everybody see this right here, this Greek time decay? Unched on the day equals time decay. If the XLE just hangs out until this OPEC meeting on June 22nd, we make money. Everybody see that positive theta down here? And obviously it accelerates really quickly before expiration and then goes to like 0. So, yes, so that's this one. So this is the XLE. This is a bull put spread. I was looking for 20 cents plus or minus 2 cents. Okay. Amazon, whoever asked about that, yeah, I sent out an alert yesterday to get on Amazon. Can I get a hell yeah if you got into either one of those trades yesterday? Look at this thing. Here's when I sent out the alert. Right there, There's Amazon. That is a 2% gain in a day just in Amazon. Benoit, yeah, the June 18 bull put spread. We'll review that one. I'm probably gonna send out an alert to close that one, guys. So, congrats, Chuck, Andrew, Jeff, Brad. Awesome. Kevin added to his synthetic stock position. He's up $8,000 in 3 days. Tamara, there's our double vertical queen. Put on a double vertical and making a lot of money there. Oh, Mark couldn't get filled yesterday. Yeah, so two really good trades. I sent out the 1635, and then I just said, hey, if you're chasing it, just go up a little bit. Look at this. They're not even on the options chain here. The 1635, 1632 and a half. Look at this. What is it? It's at 12 cents. What do we try and get? 78? 78 minus 12 times 30. That's a $2,000 gain in a day. That's a hell yeah, man. Love Amazon. This is the gift that keeps on giving, man. This is just, you can't keep Amazon down. Even Donald Trump tried to keep Amazon down, and it isn't. So, Arthur, my broker considers buying and selling a spread on the same day, a day trade, and sends me to the bullpen. I can't trade for a while. Arthur, what is it? I think you need more than 25 grand or something. Again, you have to pick up the phone and talk to those guys. I think it's 25 in equity or something like that. You need a minimum of 25 grand not to be in that status. So, it can't keep going up. Look at the S&P in February. Benoit, I couldn't disagree more. Okay. You ready for this, Benoit? Let's look at the 6-month chart of, let's compare this to to SPX. This is the reason we trade. Look at the SPX down here, Benoit. Look at Amazon. It is destroying the SPX. This is why. So Benoit, you've been here for a while. This is why you know that we haven't put on an SPX weekly trade since January, I think, right? Chuck, Amazon, the trend is your friend. Repeat it 3 times. Yesterday, Dan, you nailed it. Who came out? SunTrust came out with a $2,000 price target on Amazon. SunTrust raises Amazon target to 22% upside. They raised their price target to $2,000. So Benoit, I couldn't disagree more. Look at this. Look at the chart of the S&P 500 from year to date. This is a shit show. Whoa, hey, wow, whoa. Amazon is a monster. Amazon is up 70% since I told you to get out of Facebook, Amazon, Twitter, Tesla, all that stuff. I don't care about the PE, Benoit. You are talking old market. Where's the PE? Well, you say it's 300. It's not 300. These guys say it's 259. Who gives a shit about the PE? Look at the chart. That literally is that is 2008 market thinking, right? I'm Benoit. You're not going to get a super argument from me about this. What's the guy do with money? Who cares? I don't give a shit what this company does with their money. Look at where. Let's go out. So this is where I said get out of the fangs and get out of every fang and get into Amazon. Listen to me right now. It's up 77%. Exactly, Brad. This is trading, folks. This is if I was a private equity guy, maybe I'd talk to Jeff Bezos and invest in his company. I really don't give a shit. So, exactly, Andrew, they're not burning $10,000 a second like Tesla. This is not Tesla. It's a great point. Jeff Bezos, I think, maybe if he gets drunk and is hungover one day, might just buy Tesla for fun. Tamara, I quadrupled my portfolio on Amazon Tesla in February through March. That is awesome. Kevin, I heard the same thing. I didn't brief it on it because I don't believe in any of that crap yet, but he's right. CRYP. They're going to come out with their own cryptocurrency, folks, to use on Amazon. They're going to destroy Bitcoin and everything else. Do you not understand? They're going to build their own FedEx, UPS. They're already in Whole Foods. They talked to Jamie Dimon, JP Morgan, and what's his name, the old dude, Warren Buffett. They want to be in healthcare. Anything Amazon touches, they destroy or take over. So whoever asked, I would absolutely do a Jan 20, but here's the problem. It's expensive, even for one contract. I don't think that's a problem, though, because you look at Greg and some other people that listen to me. Where's Greg's initial? I don't know if Greg's in here. I haven't seen you yet, my friend, but look at this. Greg the other day, it's like, hey, dude, everybody look at this. He did a Jan 2019 trade, I don't know, about whenever I initially talked about it. That cost him, Greg, how many contracts did you do? That looks like one contract. And then when he did a Jan 2020, he spent about 49 grand, right? That's 80 grand. So he invested 80 grand in his long call diagonals on Amazon. That's a shit pot of money, folks. I don't care if you're rich or poor, that's a lot of money. It's worth 156 right now. Essentially, he doubled his money. Okay, so I can take the time to look at a Jan 20 on Amazon with you all right here, but it's going to take a little bit of work. Amazon coins, that's exactly right. Oh, Greg did 2 contracts. Thank you, Patrick. So maybe one isn't that expensive. Frank, thank you for asking this, Frank. Frank, you did a good question yesterday too, man. You get a gold star. I can tell by your name you're a new member and you're doing some good work. What is a good proxy for Amazon if you can't afford Amazon? What ETF did I tell you guys to use instead of Amazon? Let's see who's going to get a gold star. Because Frank, you're right, man. Doing one contract on Amazon, you got to sell the wife and kids. You guys got it. The XLY. You ready? XLY Holdings. You ready for this? I love doing this shit, man. I love helping you guys out. Greg making about 75 grand on my Amazon recommendations puts a massive smile on my face. It's the XLY, folks. Look at the top holding in the XLY, 22%. And you know what's funny is, who was it? Benoit or Kevin or one of those guys, we got into a little friendly disagreement about whether Amazon is a FANG or a tech company. It absolutely is not. It's in the consumer discretionary ETF. Hell, even the E-Trade platform calls it a what? What do they call it? It's a services company, these guys, right? They call it retail services. So if you want to do this, Dano, that's another one, man. Artificial intelligence. You name the industry, Amazon is touching it, or they have people planning to touch it. So I don't know if I want to eat up too much bandwidth on a Jan 20 with Amazon. Why don't we look at the XLY? What else is in this thing? Number 2 is Home Depot. Somebody just said Netflix ain't too shabby either. I can't stand Netflix with the deal they just did with Barack Hussein Obama. It's completely disgusting and pay to play. There's a big Netflix boycott going on, but anyway. Thomas just did the math. He said, hey, Wiz, it's 55 grand for a Jan 20 over at Amazon. Holy crap. That's crazy, man. Disney's in here. I can't stand Bob Iger or Disney. Comcast, McDonald's, that's good. Brookings, Nike, Lowe's, Starbucks. I can't stand Starbucks. Their CEO, I want him to run for Congress, for president. I've been blasting him on Twitter. What do you do a week after you lose $21 million in an afternoon and you turn your stores into a needle exchange and a public restroom? You quit. So anyway, Kevin, do a synthetic stock at 1,800, receive credit with 1,500. Oh, Benoit, I stopped drinking it every day. I absolutely stopped. I have to stop calling it that. There's actually a boutique coffee shop down the street. I don't drink it. I absolutely don't drink it. I think it's a piece of shit company with a horrible CEO. I can't wait for that dude to run for president. So Kevin, somebody just did the math on maybe synthetic stock with Amazon. You know what? Let's do a vote because we don't have. I want to try and get the win towards the end. Do you want to do synthetic stock on Amazon or a Jan 20 long call diagonal on XLY? Tamara, I saw that they're going to open 1,000 McDonald's. All these people, $15 minimum wage. You just worked yourself out of a job. Everybody's saying XLY. I got one Amazon. Exactly. A week after you lose $21 million in an afternoon to train people on common sense and decency, and you publicly open your bathrooms to homeless people, heroin users, and crack addicts, and drug dealers, you quit. Pamela, gotta find a cheaper broker. Thinkorswim charges me $60 one way for just 30 contracts. Pamela, do me a favor, get in the ready room. I think it was Tamara and like 5, 6, 7 of your other squadron mates got in the ready room and had a great commission discussion about brokers. There's some really, really good brokers out there that are like, they'll pay you almost. And don't forget, like Diane's reminding right now, Pamela, pick up the phone and say, hey, Thinkorswim, it's Pamela. How can we help you today? You can close my account. Whoa, Pamela, we don't want you to go anywhere. Well, I have a better deal over at Broker X and close my account. I guarantee you they match it. And if they don't, they should lose your business. Does that make sense? Anyway, so pick up the phone and call them and say, I want to close my account and transfer it. If they don't go out of their way to hook you up, then they deserve to lose your money. But go in the ready room when you get a chance and take a look at it at the broker discussion. So there's the XLY. I mean, it obviously ain't Amazon. Let's take a look compared to Amazon. So there's Amazon during the same frame. Woo. So it's not obviously lockstep. We got some McDonald's in there. We got some Home Depots. We got other stuff. But it ain't too bad. Let's take a look at what's the 2-year return on this thing? Right there to here. 45% in 2 years. That's a hell of a gain. Just in the ETF, guys. What's the 1 year do? 20%. Christ almighty. That beats the S&P 500 was up what? Last year. It was up 22%. So this is awesome. You're welcome, Pamela. Yeah, trust me. I help build Options House. That brokers don't like losing customers. If you call and say, hey, man, I'm probably going to move my account to brand X because they're giving me this, and this in commissions, they either should match it, beat it, or they deserve to lose your business. And you should go over to brand X. Okay. So here's what we're going to do. Let's do a Jan 20 on the XLY because, like I said, Amazon, I mean, it is. Let me just price this out real quick. I don't want to confuse people. We're at 1690 essentially. Let me just do a quick synthetic stock here and see what it would look like by the 1680 calls. Yikes! 82 grand. Well, that's 10. Duh, whiz. Almost fell out of my chair. You know what? That's not too bad. That's 8 grand, man. What time is it? 1:30. You know what? I'm going to do both. And if I cruise and lose you, go watch the training videos. And I got behind schedule today for this week, guys. So we're going to start our training next week because I got to go up to Dallas and speak tomorrow to the board of directors for the Mothers Against Drunk Driving. So let's do both. I'm going to do both. You ready? Let's cruise. Synthetic stock. And let me. You're right, Dan. But remember, when I talk about longs, this is the exception to my SOP. When I'm doing a long call diagonal or synthetic stock, I blow off. Well, I'm not going to say blow off. I blow off my 5 grand. Okay, because it's just Amazon's going to be around in 2 years. Does that make sense? Okay. Correct, Karen. Absolutely. You used to say put XLY on our radar around November 1st. No brainer then. Amazon has really changed the equation. You got it, man. All right, so real quick, let's do synthetic stock on Amazon. I'm going to build this real quick and then try a long call diagonal on the XLY. So, and it's up to the pilot command. What is synthetic stock? First, let's start with the definition of what it's not. You ready for this blinding piece of brilliance? Synthetic stock is not stock, but it acts exactly like it. What don't you get when you do synthetic stock? See, we're going to look at this real quick. Let me kind of get to the last chapter first. This P&L diagram should look like stock 101 to you. When you bought your first mutual fund stock or ETF, this is it. Amazon goes up $1, you go up $1. This, you can't have a more basic P&L chart. That is a chart of what? Long stock. So, synthetic stock, you don't get two things. You get the same exact performance of the stock, but you're using options. And you ain't tying up 176 grand, you're tying up 8. Well, what don't I get, Wiz? Here's the two things you don't get with synthetic stock. You do not get to vote because you're not a shareholder. Duh. Exactly, folks. It is, Ryan, you nailed it. Synthetic stock requires less capital than buying the shares, and you have the greater upside for the same bang. You're exactly right. So, and you don't get dividends. I don't even know if Amazon, no, they don't even make money, right? Of course, Amazon doesn't even have a dividend, guys. So two things you don't get anyway was, you don't get to vote and you're not a dividend folk. Does that make sense? So, who cares? Exactly, Andrew. Your vote doesn't even matter. Jeff Bezos owns your votes. Anytime I ever owned stock in my life, whenever I got one of those ballots in the mail, it immediately went in the recycling. I didn't even open it. So anyway, plus. So with synthetic stock, you don't. Who cares? Now. How do you select a strike, and what do you do? The first thing I do, I just go at the money. I hop in my Super Hornet. I fly as fast as I can out as far as I can go. Why? I want as much time for this trade to work. I want a shit pot of time. If I could do 5-year leaps, I'd be in 5-year leaps, right? We go out to Jan 20, and we take a look at the at-the-money options. We're at $16.90 on Amazon right now. There is no $16.90 strike. There's a $16.80 and a $17.00. So I'm, Ty goes to the deeper in the money, the $16.80. Okay. So how do you create a synthetic stock position? Ed, I like to vote Apple shares so I can vote against Al Gore. I love it. Well said. Here's how you create synthetic stock. Wiz, you had me at Amazon. I think in 2 years, by Jan 20, Amazon goes through the roof. Even if Donald Trump does pick another fight with it, it doesn't matter. Amazon just keeps going up. Well, you have me. I couldn't agree more. Here's how you create it. And I'm going to teach you this in our second session in Full Throttle and Options Weapons School. When you buy a call, you're what? You're bullish. You think the stock's going to go up. What else can you do if you're bullish on Amazon? You can sell a put, right? When you sell a put, you think what? It ain't going to go down. Just think about that, folks. One of the most basic options tactics is what? Wiz, I'm bearish on Tesla. I'm going to buy some puts. When you buy puts, you think a stock is going to go down. So when you sell them, you're thinking the exact opposite. The stock is going to go up. So this is called synthetic stock. And here's the order ticket. Let's take a look at it. Damn it. Here we go. I'm going to sell the Jan 20 1680 puts. I just said at the money and puts if I'm bullish. I'm also going to buy the Jan 20 1680 calls. And here we go. When you sell a put and you buy a call with the same expiration and same strike, you get synthetic stock. Now this, and we don't do these often, do we, folks? This is a debit spread, man. I'm coming out of pocket on this thing. Well, somebody tell me, how can we make a little bit of scratch on a monthly, week? Amazon has weekly options. What can we do? We could sell some front month upside options to maybe bring in a little premium every week or every couple weeks. Exactly. However, if you've listened to my lectures on long call diagonals and synthetic stock, you know that when something is on a tear, this is kind of it ain't flat, and this is a tear. Well, that's a gap. Amazon's on a rip your face off rally right now. You know what? Shit, we have some existing Amazon trades I wanted to. Well, they're doing great. How about that? Anyway, I'm not going to waste time on those. Obviously, the existing Amazon trades are great. If you're looking at 70, 80, 90% gain in those, close those. So yeah, Harry, I mean, this is a good climb schedule. So I'm not going to, what do I say? I'm not going to roll around in front of a steamroller picking up dimes. It's just the risk is too high. So let's not do it. Let's not sell any front month upside calls right now because it's on a tear. When it starts doing something like this, a little bit of a climb schedule, or it was doing what? It was moving sideways for about a month here and then took off. That's when we'll sell some front month upside calls. So, Deb, I don't have portfolio margin, so they will not let me do the trade because they haircut you for the entire 168 grand. See, yeah, that sucks. That sucks, Deb. And even, well, let's fix this, right? Let's reduce the risk a little bit. Holy crap. Tamara, I have a 427% gain on my Amazon double vertical today. Bam! So Deb brings up a great point, ladies and gentlemen. The first place your eye should have gone as soon as I clicked on the Analyze tool was what? I've trained you to look at this puppy every time. Holy crap, Wiz, are you on crack? I can't risk a son. Well, this is risking 176 grand. You are just like a shareholder, right? You're long stock. What's the risk in this trade? Amazon goes to zero. What are the odds of that happening? Those are the same odds as Mr. Blutarski's GPA in Animal House. 0.0. I'm sure somewhere out here to the 16th decimal point, there's a 1. Amazon will be around in 2 years. Werner, you just answered my question. Amazon, as you say, is now on a tear. Why don't you sell a call? You don't sell a call, Werner. That's the educational point I'm making. Do not step in front of this and sell a call. That would be stupid. You step in here and sell a front month upside call, it's going to get taken out. Amazon, now it's momentum. There's just not good fundamentals under this. It's momentum. Werner, I don't have too much time to go. You have to watch the synthetic stock and long call diagonal training right here. I spent about 15 minutes talking about if a stock is flat, what percentage, right here. If a stock is flat, if it's on a tear, or if it's even going down. So please, please, please watch this. Everybody, if you haven't seen the training on this, yeah, Thomas, you can't do it either. That's why I want to rush through this and go back to XLY and maybe do a long call diagonal. So, but how do we fix this, folks? How do we fix Amazon going to zero? We put in what I call a disaster put, right? Let's buy a Jan 20. What would be a disaster? I usually say if a stock's going to go down about 20%, what do I do? You do a disaster put. What's 20%? What's 17,734? Let's just say 35. 1690 minus 30. What's 20% below this, guys? Let me do the math. 16. What's that? Let's just round up and say 17. Yeah, about 1340-ish, right? 1340. Okay, so 1340. Let's buy the 1340 put. 1340. Now you look at this, And look at that. So with a wave of my magic wand, I turned the risk from 176 grand into 50. But look at what I did down here, guys. We were coming out of pocket 8 grand. Now we're coming out of pocket like 16. So I don't want to waste too much more time on this. So this is, if you can do this, if you're Greg or some of the other folks, I would do this. This is the one I do. If I had the scratch to do this, let's just say Greg and I and some other folks who did get an Amazon when I said, and me are very, very, very happy people. Okay, so this would be synthetic stock with what we call a disaster put. This is it right here. Okay, but I don't want to. Maybe I'll. Has anybody done the XLY? Is synthetic stock or a long call diagonal better? And we can actually do a front month call on this one because this isn't necessarily on a tear. This is kind of a little bit of a good climb schedule. Let's take a look. Long call diagonal tomorrow? Okay, let's try that. Let's hop in our airplane. Let's go the speed of light and go out to Jan 20. We're going to do a long call diagonal. Okay. Let's take a look at Delta. Let's open the strikes a little bit here. 20. Let's do 20. Hold on. 20, 40. So the Jan 20. So here's what I'm doing, guys. I'm opening up there it is. There's a 0.8 Delta call right there, the 92s. So here's what you want to do in a long call diagonal. You want to hop in your plane, fly out to Jan 20, and find a deep in the money 80 Delta call, 0.8 Delta, right? What does Delta mean? First of all, it's the probability of these calls finishing in the damn money, okay, 80%. But here's also Delta. This is the more important definition of Delta. And we'll talk about this during academics. Slower and more in depth, folks, but I'm kind of cruising. It's the rate of change in the price of these options based in the rate of change of the underlying, right? So let's pretend these options, this says 1.0. It's a delta of 1.0. That means if the XLY goes up $1 today, these options prices go up today. So an option that has a delta of 1.0 means it's a 1-for-1 change. If you notice these, and obviously if you go down here, where's a 0.5 delta? No, it's all the way down here. What do you notice about a 0.5 delta option? It's out of the money. Where's a 0.5? Look how far out of the money the 0.5 is. But look at how cheap it is over here. Where is it? 0.5. It's what? It's 670, and the 0.8 delta is what? Holy crap, it's $22. Yeah. Why? Because it's got extrinsic and intrinsic value. Right? Exactly, Harry. A 1 delta position is like, it acts exactly like the stock. I just told you, we just looked at a synthetic stock position where it's a 1-for-1 move. XLY goes up $1, these options prices go up $1. So in my over quarter century of trading options, I do what? I like to do deep in the money 80 delta calls. So let's click on it. They were what, the 90s? So let's click on this. Let's buy a Jan 2091 call. You could just do this. You know what, Wiz, you're right, man. I like the XLY. It's a good proxy for Amazon. Let's do this. You could just buy these calls, put them in a filing cabinet, and look at them in a little bit, right? In a couple of years. And they'd be looking pretty damn good. Okay. Let's see how much risk this is. So we'd be coming out of pocket 21 grand for 10 of them. And our risk is what? This is the most you can lose when you buy calls is what? What you damn pay. So the math is pretty easy on this one. My max risk is that because this is what I'm paying to do this. Okay. So you know what? Let's do maybe 5 of these just for giggles. Okay. So in this case, I'm coming out of pocket about 11 grand, and that's obviously my max risk. Well, if you weren't mentally clubbing in the Bahamas 10 minutes ago when we talked about synthetic stock, you know that we're missing something. What are we missing? A disaster put. Let's buy 5 of the Jan 20. What's that? 73? 75. The Jan 2070 86. Is it 75? 86. 86, sorry. And puts. I'm working on my second cup of coffee here, guys, so I apologize. Anyway, 86 off the 108 price. Okay, good. All right, so now obviously our price went up a little bit because we just bought. When you're buying a put, man, you got to come out of pocket. But look at what happened over here. Now look at our risk. Look at that, man. This is awesome. Okay, but we're missing one more thing. Benoit, yeah, I made this a put. This 86 should be a put. It's a disaster put. It shouldn't be a call. We're buying the 91 calls and we're buying the disaster put. You got it. So what can we do now? So Amazon looked like it was really on a tear there. This is a little this is a little bit of a tear, guys. But what could we do? Let's go out maybe a couple weeks and sell. You got it. Some front month upside calls. What do I mean by that? Here's the front month, folks. You ready? You're sitting in it. June is a front month. July is a front month. August. So here is what we call the front months, right? So there's the front months. So why don't we sell a front month upside call? Now, like I said, I already put the link to the lecture, so I'm going to cruise through this a little bit. When something is on a little bit of a good climb schedule like this, here's the rule of thumb. I tend to sell front month upside calls that are, you ready? Maybe about 7.5 to 10%, write this down, out of the money. Why? Well, the thing's on a little bit of a climb schedule is you probably want to give yourself a little altitude up here in case it keeps climbing. Yes, that's what we want to do. So that's that rule, since this thing's on a little bit of a climb schedule. So let's take a look at maybe the 110s. So yeah, maybe, so tomorrow, what are you saying, the 120s? Let's go out to, you know what, I think there's going to be, to be honest with you guys, I think there's going to be a lot of volatility around this OPEC meeting. So maybe let's take a look. Yeah, I agree, Tamara. I don't think it's going to disturb Amazon, but what I'm doing is whenever I'm looking to sell some front month upside calls, what am I doing, Tamara? I'm always red teaming. I'm not going to sit here and say I'm brilliant. Nothing's going to happen, and this thing's not going to climb. I'm going to sit there and say, good point, Richard. The FOMC meeting next week. So let's maybe go up to, what's the highest we've been in a while? Maybe the 109's out a couple weeks. There you go, Tamara. Exactly. Good. Let's sell. You ready? Sell 5 of some front month upside calls. Maybe I'm going to do the 110s. This thing does feel like it's on a little bit of a tear. Now look at the risk. Folks, we started with what? Look at this. We started with about 22 grand in risk. And now look what we're down to, 7,700. This is pretty damn close to what a lot of, and again, I can't give you personal advice. I'm talking to nearly 200, 250 people in here, so you got to do whatever. Now, Andrew, the P&L diagram, ignore this. This 35 grand max potential profit is based on the disaster put. E-Trade, I can't complain enough, and they never fix this stuff. So let me just make sure everything's good to go. Oh, it's the front month. Duh. Maybe that's part of it. But you'll still see it. Watch this. This thing's still kind of gooned up. Actually, no, that's better. Oh, that's what it, yeah, look at the max loss. It's physically impossible for the max loss to be infinite because we have on a disaster put. So they screw up the math with this. So yeah, with these long call diagonals, just take your time and make sure the switches are in the right place. Buy 5 of the Jan 2091 calls. These are the 0.8. Let's just kind of check it off like a checklist. You ready? Check. 0.8 delta calls. Buy 5 of the Jan 2086 disaster puts. Check. Sell 5 of a couple week out 110 calls. Front month upside calls. All the switches are in the correct place. Now we can do what? Now we can take a look at some of our metrics. Let me grab a screenshot of this, guys, so I can blast this out. How many of you got into the, Karen, I know you said back in November, I said to put this on your radar as a good proxy for Amazon. Did any of you guys actually heed that said advice? Okay, so now let's keep your eyes down here, folks. Oops, let me just kind of circle this stuff. Keep your eyes down here as I go back and grab my, look at this. There's your max potential gain, about $400 if the XOY is below 110 by June 22nd. $500 right there. Everybody see that? Everybody see where it says theoretical P&L at expiry? About $500. So you make money 2 ways in this trade. XLY goes up, which we want it to, but it stays below 110 here. So you make the money of the XLY going up and the scratch that we're bringing in by selling front month upside calls. Does that make sense? Everybody give me a vertical head nod. Diane, what are you showing? Oh, Ken's up 70%. Ken said, I did. Marilyn did. Oh, am I not at midpoint, guys? Oh, that was stupid. No, I'm at mid-market. So here's your checklist. 0.8 delta, disaster put, front month upside call. I'm at mid-market, and it's a debit. All right? Everything good? Everybody got it? Jonathan did it in March. He's up about 10%. Okay. Compare what charts, Wiz? Compare the charts, Wiz. They are not moving the same sideways. I don't know what you mean. David, I noticed I could buy the 100 puts for a couple bucks more, and it limited my downside more with similar upside. David, well done, my friend. So you can play. Guys, remember, this is homework, folks. You can play with the disaster puts, and it absolutely is going to change this. You got it, folks. So, again, I don't want to chew up too much of the clock here because there's an hour-and-a-half lecture on just this topic, guys, okay? Does that make sense? Anyway. And Steve, we do have to talk about JP Morgan and Win, so we got to cruise a little bit. Dan, I don't know what the math is. I actually picked the 110 front month upside call. I don't know if it's 10% out of the money or whatever. That's just a good rule of thumb, guys. I picked 110 because We topped out at 109 back in January when the market had this rip your face off rally. The last time we saw this, it should turn into potentially resistance. Okay. So that's why I picked it. I don't know what percentage it is. This is just a good rule of thumb, folks. The 7.5 to 10% out of the money is just, it's good if something's on a good climb schedule. So I'm using a little bit of technical analysis here too. Does that make sense? Harry, I stated that at the beginning, my buddy. The XLY and Amazon. The XLY is not Amazon, Harry. We covered this, man. XLY's got Home Depot in it. It's got McDonald's. It's got Walt Disney. So, of course, the charts aren't going to be exactly similar. Amazon's going to blow the doors off of it. I showed you an Amazon synthetic stock position, and what did I say before I moved on to this one? I said, this is what I would do. If you had the coin, you need to be in the Amazon long call diagonal or synthetic stock. If you don't have the coin, this is a proxy. It ain't exactly right. No, that's all right, Harry. No worries. I'm just making sure that point's clear because I definitely want that. So, real quick on getting filled in this trade. Okay? It is, yeah, look at Amazon, man. As we talk, what a great weekly options trade, man. We have been printing money in Amazon, folks. The last time we got our ass kicked was when Trump was tweeting. This thing, we can't miss. Here's where I sent the text alert out, right there. Anybody still in the weekly options trades? It's up 2.5% in 2 days. Anybody still in the weekly options trades? Harry? Okay, good. Marcia? Jeff? I am, but closing at the end of the day. Yep. Benoit, last time you got your ass kicked, I was in it. Me too, Benoit. So Werner's got 2 of them on. Remember, guys, go on, take the money and run. Like the guy in the song said, take the money and run, and pigs get slaughtered. All right, let's talk about getting filled on this trade, and then we got to cruise on to some other things. John, thanks for the heads up. I could care less. He's not here for a reason. He can email you all he wants. This is a debit spread, folks. This is mid-market, right? And between us ladies, there is no competition, right? This is mid-market. You're never going to get filled on a debit spread right there. And people are going to laugh at you if you try and come in at the bid. This is like, hey, we're asking $2.4 million for this house, and you offer 2.3. They're going to laugh at you. Okay? So what you need to do is I call it walk on up. Even though I give Warren Buffett shit for being one of the biggest limousine liberals in the world, he had a great quote. He says, if you pay 1 penny more in taxes, you're an idiot. If you pay 1 penny less, you're a felon. That's a pretty tight window, isn't it? So here's what I do. And Benoit or Werner, whoever said, I say Starbucks, but trust me, I don't patronize the place. I used to call this my Starbucks move, meaning I'll put the trade in here probably about 5 cents above where it is right now. And then I used to say I'd go to Starbucks. And usually that was a figure of speech because I usually go for a run or workout. But anyway, you have to walk the trade on up until you get filled. How long do you wait? I don't know. That's why I call it like the Starbucks thing. And I go away for half an hour, come back, take a look at the trade. I didn't get filled. You need to go up incrementally. And I'm not even going to click on the ask because it makes my hand shake. If you come in at the ask right now, that's kicking open the door for the house that's for sale and going, I'm going to pay you what you ask. I'm going to pay you more money. You'll immediately get filled on this trade within the blink of an eye, and you'll be down about $1,000. That's stupid. Mike, I put my trade in at mid-market, 23.84, and I was shocked when I was filled. Oh, thanks, Mike, for the mutual support. So everybody listen to Mike. Mike, are you at break even or are you in the hole a little bit? So then stick at mid-market, folks, when your squadron mates is helping you out. And who said that again? Mike. That's happened to me before, too. I'm like, I'm never going to get filled here. And I got filled. I'm like, ooh. So, curious, why not Gen 20 Amazon buy? Frank, you could do that. I don't do debit spreads that far out in time. Sometimes they actually chew up more capital. Guys, a lot of good questions flying around. Let me finish this trade. So if if one of your squadron mates got filled pretty damn quick right here at mid-market, just hang out here then. And maybe only don't go up 5 cents, maybe go up a penny at a time. Okay? Does that make sense, guys? And let me grab a screenshot of this. I'm going to text it out. And then we got to talk about Wynn and JP Morgan. Because the front month calls, I don't think by Friday the front month JP Morgan calls are in danger, to be honest with you. The 107s or something. I wouldn't touch them. There, we talked JP Morgan. I wouldn't touch the front month. The financials are under significant pressure right now. XLY 65 metric. Let's shoot this out to our squadron mates who are not here. Where's the broadcaster? All right. Primary live trade brief. All right. PLTB new XLY. I'll put this in parentheses. Proxy for Amazon. I'll put close proxy. Well, I don't know if it's even close because Harry's right. I mean, the chart's saying it's heavily weighted in Amazon. You guys know what I'm saying. 5 contracts. I'm going to buy the Jan 20 91 calls. I'm going to buy the Jan 20 86 puts. I got to do this slowly because there's a lot of moving parts. I'm going to sell the June 22 110 calls at a 23.84 debit, walk on up from there. Oh, you know what? New XLY long call diagonal. Let me get rid of some sort of letter here. I'll get rid of an S on calls. Or no, I can do that. It's 0. Hold on. Copy. Okay, so I just blasted that out. Dennis got filled immediately at 23.83. So, all right, guys, don't walk it on up. Hang out in the middle. MD, no. Whoever said selling the 86 puts? God, no. They're disaster puts, remember? Disaster puts. So, yeah. Patrick, can't believe Amazon's 1,700. It must be getting old. Guys, Amazon's going to be I think this price target, whoever put this out, 2,000. I think 1,900 or 2,000 in Amazon is low. I'm making a prediction right here. Sitting here this time next year, Amazon's a $3,000 stock. Easily. Harry said he got filled 5 cents below the middle, guys. So maybe go lower. That's weird. Well, you know what, as well, folks? Amazon's liquid, man. It moves. It's not like we're in one of the stocks that we move, right? TLTB, new, XLY, long, call, diagonal. So whoever said, hey, shouldn't you be selling those puts? Please, please, please watch the training. That's a big learning point. Again, let me bring up the training here. I'm going to post this again, guys, because we have other positions we have to talk about. We can't do training here all day. So there it is right there. Diane also got filled 5 cents lower. Hey, for everybody who's getting filled right around here, but what's your P&L? Is it showing like immediately down a little bit? Or is it, if you got filled and on your screen it says, hey, you're even, then you got a perfect fill. If you didn't, then yeah, we probably could have went a little bit lower. But if you've been here for a while, you know that with our long call diagonals, we usually have to walk them on up above mid-market, right? Everybody understands that. So I just, Diane's even. So Diane got a perfect fill. What was your fill, Diane? I know you said 5 cents lower, but let me put it out for everybody. Fish, I'm telling you, man, they are going to get their own airline delivery service, and maybe they buy CSX, maybe they buy a railroad, man. I'm telling you, folks. And who was here? Fish, you might have even been here that long ago, like 4 or 5 years ago. I was not an Amazon believer, man. I was more of it. You ready for this? Ready to fall out of your chair? I was more of a Facebook believer back then. So, you know, Peter, I'm even, but I had to leg into each one due to the broker. That's interesting. Ryan, I Fish, we're going to have a bunch of FedEx guys at our June 30th conference here in Boca. I definitely think Fred Smith over at FedEx should be looking over his shoulder. I think Amazon's going to give them a run for their money because literally they are moving most of their stuff. Harry got even. Yep. Okay, good. All right. So most people are getting filled on this trade right around even, which is pretty damn good. Mike got filled at $23.84, guys, and he's down $6. So you got a perfect fill as well, Mike. About 20. So mid market on this is about $23.84, guys. And it's funny because I guarantee you, with 300 people in this room pounding this trade right now, it is impacting the XLE. Isn't that awesome? Pamela, it just depends on your broker. This should be one trade. If you're putting it in like this, it's one trade. This is this is a trade right here. If you do individual legs, they might charge you commissions for each one. So like I said, I don't like talking commissions because everybody's different, but I put that in as one trade. All right, real quick, JP Morgan, because we do have a short 107 call out to Friday. The trend is not your friend here on JP Morgan. We're heading down there. So I'd hold that 107 call. I wouldn't adjust it. I wouldn't touch it. I don't see a huge rip your face off rally going into the rest of the week here. Dan, my commission on this trade was $10.95. How many contracts did you do? So, all right. Let's get to some existing positions in the PLTB that we have to cover, guys. We have a lot going on. All right, so yeah, Dan did 5, and his commission was $10.95. So, Dan, who do you trade with? Maybe Pamela needs to move over there. All right, here's last week's accelerated retirement session. We legged into a win iron condor with a bull put spread. Okay, the 190, 187 and a half, risking 57 to potentially make $1,800. And here was the resulting iron condor. Okay, so with win literally shitting the bed here, is that not PLTB? Am I in the wrong portfolio? Should be. Member content, PLTB. Or did I click on the wrong tab? Where is it? Oh, yeah, you're right. Damn. That's tomorrow. Never mind. I'm sorry, guys. Okay, Dan's at E-Trade. That sounds familiar. So, Pamela, maybe you need to move over to E-Trade, man. I would. I'd pick up the phone after this session. I'd call Thinkorswim and say, you guys suck. I'm moving to E-Trade. And I guarantee they match it. If they don't, they deserve to lose your business. So last week we had a weekly Amazon trade that another one, a winner chicken dinner that we closed for in a day or two. I think, didn't we close this one Wednesday? So nice trade there. Then we looked at what? A Raytheon, what? Bear call spread. We legged into an iron condor on Raytheon. So let's take a look at Raytheon. Let me get a hell yeah if you're in this trade. Let's go to Raytheon. Shit, we didn't talk about Brazil yet either. Damn it. There's a lot going on. You bet, Mark. Fish, I am out of town. We'll do AR tomorrow because I fly out of Fort Lauderdale at like 5:30 or 6 or something like that, and I get back Thursday from Dallas around the same time. So here is Raytheon. So we have the 212. Whoops, hold on. Let's put the 3-month up here. Look at Raytheon, guys. What did I tell you about this iron condor? Right down the fairway. So everybody should be fine in the iron condor. No adjustments. Everybody cool with Raytheon? Any questions, concerns? Oh, by the ways. So Raytheon's fine. This is the JP Morgan long call diagonal. On here, if you're not in JP Morgan, Well, I just talked about JP Morgan. Hold the 107s. Okay. This is not a bullish looking. This doesn't. It bounced off kind of this low here, and that's just hold the 107s. I wouldn't do anything with that. Okay, let me go back to here. Amazon, Raytheon, JP Morgan, Amazon. This is the. This was another Amazon trade that closed for max profit there. Damn, Amazon should be absolutely crushing it. Werner, yes, JP Morgan is a prime. All the financials are weak right now, guys. It just don't feel good. I didn't brief that. The hell is it? Oh, there's the Saudi Arabia story. U.S. said to ask OPEC for 1 million barrel a day output. There was a good article in the journal today about the financials. Damn it. Sure, I can post that because we're going to run out of time here. You can read this. This can be your homework. This is a great article on WIN that I wanted to brief. So there you go, Kevin. This can be homework. We'll talk about it tomorrow. Shrek, WIN is not in this portfolio. That's what I'm saying. WIN is tomorrow in AR. WIN's not in the PLTB. I don't want to confuse people. Yeah, no worries, bro. But there's a good article on WIN. It's actually a very, very good article. I'd be looking to add. So let's take a look at other existing positions right now. That Amazon trade was good. This is the June 18th. So I'd close this one, guys. Anybody still in this one? I thought I sent out an alert on this. David's in it. VIX. That was last week. Those VIX calls, I wouldn't touch them. Maryland closed it this morning. The 15. Yeah, this is close this, guys. This is the 1517. This is out to next. That's right. I'm still in this one, guys. Last week I said what? Let's just let's see what this one's worth. The 1570, 1567 and a half. Wow. We're $100. Can I get a hell yeah on this one? 1570. Holy crap, you got to keep scrolling. 1570, 50. Close this, folks. It's got to be at near max profit. 1567 and a half. Jesus. What a great trade. This thing, it's at 6 cents. Woo! That is phenomenal. Nice job, Werner. Excellent. Good job, Kevin. So let's close this one out. That's 6 cents. What do we get into? $1.02. That's 96 times 35. 96 times 35 equals a $3,300 gain. Holy crap. So if you are getting your ass kicked in the WIN Iron Condor, there's your $3,300. Woo. So, where's the message media broadcaster? That's a 96% gain? Woo. Harry's up 94% in that. Hell yeah. All right, let's get out of that one. PLTB. Update. Amazon. Close the 1570, 1567 and a half, June 18 bull put spread at 6 cent debit for a 97% $3,300 gain. Bam. I think it might hit 1,700 today, man. This is awesome. Tamara's up 707% on her Amazon double vertical today. Damn. Whew. Jan, I think I said this 7 times today in this brief. WIN is in the accelerated retirement portfolio. We will cover WIN tomorrow. I would, if you're, if you don't want to run the risk of assignment, close the trade. If not, let it expire for what it is. Tamara, down 909%. Diane says she wants to be your trading partner. Amazon is the gift that keeps on giving, guys. What a great freaking couple days in Amazon. Look at that thing. Look at today. Woo. We have been printing money. I'm glad we get to share. Exactly. Yeah. Awesome. Good. All right. Let me cover if we have any more existing positions in PLTB that are of concern. The rut, I got kicked in the teeth. This was a loser. This was one of my losing trades lately. And as you can tell, it sucked. The Russell, it just, you can't keep it down. That's good. That's good news for the overall market, guys. So on the 27th. Oh yeah, absolutely, Fish. That's great. Okay. Arthur, please explain how Tamara is able to get a 900% return in such a trade. It is called a double vertical, and you need to watch. You can get these percentage gains, folks, because she's doing what? A bull put spread and a bull call spread together. If you haven't watched the double vertical training session, you might not know how such profits are possible. They are absolutely possible. So here we go. There is the double vertical training session. We haven't done a double vertical in a while. I usually do it as a hedge or something like that, but Tamara's been crushing them with Tesla and Amazon and other positions. If you think, and I don't want to steal some thunder from the double vertical session I just posted, you have to be 3 reallys. Okay? Really bullish or bearish on something. So Tamara recently apparently has been very, very bullish on Amazon. And she's been right, as have I. So you can do, Patrick, watch the double vertical training twice. Patrick just gave out some great free advice. Watch this session twice. I'd say 3 times. And then after you do a couple, like Tamara, go back and watch it again. And Tamara's saying she's actually doing some good paper trading as well to tighten up her SOP. So folks, if you think something is really going to move, that's when you do a double vertical. And take notes. Good point, Dan. Absolutely. Harry, Visa is in accelerated retirement and analyze your trade. So, yeah, Visa's not in this one. Visa had a service interruption in Europe over the weekend and not... Oh, I get it. No. Oh, get out of here, Tamara. Guys, look at this. She gets the Squadron Mate of the Year award. Look at this. Tamara just said she's writing a paper. She's writing a paper about her trading to share with everybody. Look at that shit. There you go, man. So Tamara's a success story, man. She got here, a couple of February and a half ago. We met down in Miami. We had a great time at our first trader conference in Miami, and she has been printing money with these double verticals. God bless her. 1 year. She's literally been, 1 year. You're right. And she's been like, Tamara listens, folks. So, and again, I don't like talking to hear myself talk, believe it or not. I know that's shocking to you guys to hear, but I don't, right? So this is... When you hear me say something like, hey, I'd pound something into the dirt or I'd get really bullish here, usually I just put on a spread or something like that. I usually don't do double verticals because it's not like they're varsity. It's just, I'm trying to hit the kind of down the fairway. I got to be honest with you, Tamara and I probably have very similar trading styles. What I do behind closed doors with some of these positions, I also like the double verticals. Isn't it awesome? Exactly. Harry, maybe she'll give the double vertical training class. That would be awesome. Patrick, Tamara started small and now she's published. So, Ryan, the upside doesn't... Listen to me real quick, folks. A double vertical doesn't have to necessarily be also... Let's look at one that's bullish. And this is just for shits and grins, folks. This isn't an actionable trade that I put on. Let me just show you what a double vertical on Amazon would look at. Let's look at the 1695 puts. So a double vertical is nothing more than this, folks. Let me get rid of the Jan 20s. Where's the 1695? So it's a bull put spread. It's 16.95. So there's a bull put spread, guys, right there. Right? That's a bull put spread. I know what that looks like, Wiz. A bull put spread is also called what, folks? A credit spread. You're taking in some money to do this trade, right? We already covered a bull put spread today. What can you do with that bull put spread? Well, Wiz, you just said if you're really, really, really bullish on something, you think this thing's going to keep on going up, what else could you do? Well, you just did a bull put spread. Why don't we do a bull call spread with it? I rarely do debit spreads, folks, because I like being the house. I love theta. I love the time decay. But in this case, why don't we throw a bull call spread on top of it? I don't know. I'm throwing shit around here. The 1700, 1702.5. So this is what, Ed, you ready for the picture? Now we need to go a little wider. We need to, I mean, shit, the way this thing's moving. Let me just go a little wider on the thing so you can see a little bit of a break in here. So now let me go even wider. 1720. Okay. Man, the options market is pricing in that this thing is not going to come down. Holy shnikes. So here's a double vertical. That's a little bit better. You can see a little ledge in here. All a double vertical is, folks, is two vertical spreads with the same strategic mindset. Here's your bull put spread. Here's your bull call spread. I call it an afterburner trade, right? This thing is turbocharged. So in Tamara's case, when this blue line, Amazon moves, it really, really, really moves. So let me actually put on $5,000 in risk and see what this thing would look like. So, and Ryan, I'm going to answer your question here in a couple seconds. How can you see really high percentage returns? Don't do the short call. And we probably do 25 contracts. Yeah, so here's how you can see those percentage return, guys. Look at what we're risking in this double vertical. We're risking $5,000 to make 7,200 in 2 weeks. This actually ain't a bad trade, folks, to be honest with you. And I'm just spitballing here. There's a 53% probability of at least breaking even on this trade. So, but here's so Ryan asked a good point. He's like, hey, Wiz, this short call rate here, it caps your upside. You ready for this, Ryan? Gone. Now what's my upside? I don't have any. What's my max potential profit? To the moon, Alice. Does that make sense? So, yeah. So, I'm sorry, call. Yeah, there we go. Well, let me rebuild this. 17, buy that and sell the 22.5. No. What's going on here? June 18, 1720. Buy those calls, sell those calls. So what? Regardless, you know what, folks, I want to stop because I don't want to confuse people, and I'm rushing through it. So, yeah. See, when you're rushed, it sucks. So there's the double vertical right there. Here's my point. Somebody asked, how can she see those returns? You can also not put on the short call on the top, and you could actually have this thing keep going. So essentially what we have is what? We have a bull put spread on right here. Obviously, you have a max profit of, the credit you take in for the bull put spread. And then maybe you just buy some long calls on the top to do what? Hey, man, this thing's just going to run. Does that make sense? Tamara, sometimes a debit to the overall, but very small cost. I'm working on explaining. Awesome. Yeah, exactly, guys. And you know what? I'm going to stop talking because I don't want to muddy the water on a double vertical. We'll do it in training in a couple weeks. But until then, I'm not shitting you, folks, when I say watch the damn last session I did on double verticals. It's an hour to an hour and a half on me talking about this. Dennis, I'm actually up in Boca today. I can be around Friday. You're in Sunrise. Oh yeah. Dennis, I'll take a look at my email. I haven't looked at this yet. Exactly, Ryan. You got it. Yeah, Dennis. Let me take a look at my messages and stuff like that. Friday would probably be better for me. But and whoever just said watch this a couple times, you're right, folks. I'm telling you, if you're brand new and you've never heard of a double vertical, Tamara is doing some good work. But it has to be on a stock, an ETF, an index that you think is going to move. You ain't doing double verticals on something like this when it's moving sideways. That's iron condor material. A double vertical means something's going straight up or it's going straight down. You want a bearish double vertical candidate? I'd pound Tesla around a little bit. This thing's heading back down. Look at this. Anybody see a trend here? And down 3% today. That ain't a good looking chart. So let me not. Definitely, Tamara saying definitely Tesla. So, and remember, folks, I don't want to go too far over here. Get in the ready room. I've been a little slack lately because I've been doing some good trading here. You need to get in here. Ask Tamara a question or something like that. There's a lot going on, so you can Werner watch the training. How far do you go out for double vertical? You have to watch the training. Has everybody got that? So everybody watch the training. If you still have time this afternoon, as soon as I close this webinar, start watching that training session. Does everybody understand? Get in the ready room and start looking and interacting with each other. All right. Yeah, Paul, I saw your post in here. I got to get in here. Volatility. I absolutely would be getting long volatility here. We talked about this the other day. Okay. This is a great time to get long vol. When vol is cheap, you buy it. When it's expensive, you sell it. Okay. But again, I don't want to start throwing shit out here as I walk out the door. It's a master class on video, Dan. Thank you. I appreciate that. That is your homework, folks, because I got to get going here. Okay, so that's your homework. I gave you some other things to do for homework tomorrow before AR. We will talk about WIN tomorrow. Make sure you read about WIN here. Here's the article on Amazon too, raising the price target. And I'll leave this. Click on this, guys, so you can read this about Amazon. So we'll talk about WIN tomorrow. Because that's definitely getting kicked in the gut. But it ain't going to be getting kicked in the gut forever. And we did an iron condor, so our max loss was limited, right, to $3,300. So that trade's only going to be a $3,300 loser. And we just closed out an Amazon bull put spread for a $3,300 gain. So that kind of negates that win loss right there. Win loss, I get it. So, okay. I'll tell you what, I'm going to split. Make sure you do your homework, and we'll do AR tomorrow before I head to the Fort Lauderdale airport. And Dennis, I'll try and let's try and get a drink or at least shake hands or grab some coffee, not at Starbucks, on Friday. So, all right, guys, have a great. Thanks, Harry, appreciate it. There you go, Shrek. Have a great rest of your day. Happy hunting. Make sure you hedge. God bless, and I'll see you guys tomorrow for accelerated retirement. We'll see you.